Hey folks, this episode is sponsored by City Traders Imperium. Now, what you might not know is CTI has the best funded account conditions up to $2 million, which is the most in the industry. Now, go check out the video I recorded with them to learn more about their incredible package where Trading Nut listeners get an exclusive deal. It includes access to their high-performance trader mastermind and funding program. What are you waiting for? Click the link in the description below or above and go check out that video. All right, guys, here we go. We're on Trading Nut here. We've got Matthew Todd in the house again after a year. Welcome to the show, Matthew.
Thank you very much.
Look, today he wants to come back on and give a bit more of an in-depth detail on market structure. And I know that if you guys saw his first video a year ago, you would have seen him talk about market structure there. This is going to be an even more of a deep dive into that, as well as a couple of examples as well for you to see what happens on a live chart. So, Matthew, over to you. Let's have a look at your chart and get on with it.
All right, perfect. So I'll just jump on just now and share my screen. You know, as Cam said, I was on just under a year ago now, and I think what we discussed when we were talking about the market structure was an EJ trade. And funnily enough, it was an EJ trade we'd taken on the live stream from that day, and it followed market structure very nicely. And I figured that a lot of the viewers that I've got that come and watch the streams have recently asked to do a structure recap session. Now, we've done one before. We did it at the start of the year in January. And what I'm going to do just now is just go through a breakdown as to how to kind of analyze structure and find a direction. Because I feel like when I used to come to the charts, I don't know about anybody else, but especially when I started trading, I always struggled to find the direction or know what the real trend was. So directional bias, market bias, or sentiment, whatever you want to call it, comes into play in that regard. And I feel like that's step number one. You need to know what it is that you want to do before you even execute on a trade. So I think understanding structure and directional bias first is two of the most important steps. And I feel like I've got a very unique but step-by-step way of defining that, and that's what I'm going to show today. And as I said before, the reason that I do it is to try and create a black and white approach as opposed to something that's quite subjective. Because I feel like with Forex, and everybody might agree, that it can be quite subjective. You can learn certain rules one place, learn certain rules another. Doesn't work one time, jump ship, try again, and eventually you start applying different methods from different people to new methods from new people. And I don't feel like it bodes well, and it is very important that people just stick to the one thing and really get to grips with it before moving on elsewhere. And that comes down to that subjective approach. You know, sometimes it works, sometimes it doesn't. Why do 50% of the people who are, you know, using the same method win and the other 50% lose? Like, why is that the balance? You know, if you're learning and trading the same way, the majority of you guys should be on the right side.
Now, you might already know the boundaries of trading are expanding faster than ever, but what you may not know is there's still time to take advantage of these opportunities. With my sponsor, Sage Strategies, you can instantly get access to institutional grade algorithms built on the back of decades of professional fund management experience. This means their systems are robustly tested, risk managed, and rigorously informed by their team of experts. Go and check them out at sagestrategies.io or click the link in the description.
So I've tried to create a way that, you know, has that black and white approach. It's almost like a tick sheet, to be fair. And to be honest, I started doing it very subconsciously. I didn't really start teaching until a year ago when I was trading this style, or maybe 2 years ago now. But I was kind of just trading this way, and it was second nature to me. I've been in the game for 7 years, and people started asking me about it, and I'm thinking, I have no idea how to explain this or how to teach this or how to build some form of education around it, because I was just doing it. It was just natural to my trading. So it allowed me to create some more in-depth rules, more strict rules in regards to how to use it. And that's pretty much how I do it now and how I teach it now. So we'll crack on into it and talk about the structure first. And I'll just draw it out on this chart as best I can. And we'll just crack on. And any questions, you can obviously pop them in comments and stuff, and I'll keep a little eye on them and things like that.
Definitely.
So how a lot of people look at structure is obviously in the form of higher highs, higher lows, uptrend, downtrend, you know, yada yada. It's very, very easy. So it'll look something like this, you know, just got a simple uptrend in market. So we talk about it quite simply. You know, we've got a high, we've got a higher low, we've got a higher high, higher low, higher high, higher low, and a higher high. So the way that I typically look at structure when I'm looking at an uptrend like this is I like to define the highest point. All right, I like to define the highest point of that trend. Now, I don't tend to do it with a wick, because I know that's a question people will probably ask. Do you use a wick to define the high, or do you use a close, right, the bodies? Typically, I'll use both. I'll normally use both, as long as the close has come above the previous high. So what I'd be saying is this is the highest point of the trend. Simple as that. It's very easy. Okay. What I would then do is look at where that leg came from. All right, where the impulse, leg, push, whatever you want to call it. Where did that come from? Which we can all quite clearly see is this point here. So what that becomes is the last significant higher low. Okay, now there's higher lows and there's last significant higher lows. And you're probably wondering, what is the difference? The last significant higher low is the one that will change the trend. It's the one that holds the most importance to the trend, whether that remain bullish or whether that flip bearish. Okay, so that's why I call it the last significant higher low. And again, I have no idea where that terminology came from. I just said it one day and that was how I named it. All right, so this is what I'm using as the last significant higher low in this scenario. And let me show a little example of when it would still remain significant, because a lot of people will see something like this and they'll look at this section right here. They'll start focusing and like fixating on this, okay, and they'll look at it and say, okay, well, we have a lower high and then we have a lower low, and now you're looking at this little section saying we're in a downtrend, right? But what you need to remember and what you need to take into account is that while we still trade above the last significant higher low, we're going to remain bullish, right? We're going to remain in an uptrending market. And there's a number of occasions, quite recently actually, not this week because GJ is ranging, but last week and also in dollar Swiss, I believe last week and 2 weeks ago, the same scenario sort of played out where people are looking to identify this as a possible downtrend, and that's just not the case. And we all do the same thing, right? I certainly don't, but beginners do. They'll draw in a trend line, right? The old magic trend line. They'll draw in the fib. You've got your fib from your low to your high. You're looking for that 61.8 pullback, your golden number. And then what you're looking to do is you're looking to short it as we come back up and test. But then the majority of the time, what ends up happening is something like that, right? We start to flip bullish. We start to remain that bullish trend. And the reason behind that is because we maintain structure based on our last significant higher low. All right.
Hey guys, ever wonder what broker I use? Well, I use these guys, Hanko Trade. Look, it was a no-brainer for me because I was looking for a broker with really good trading conditions and one without any leverage restrictions. Look, also, by joining Hanko Trade, I was able to cut my cost of trading significantly with their super low commission of $1 per 100K. Look, if you want to find out more, check out hankotrade.com or there is a link in the description.
And that's the way that I trade structure. That's the way that I look at it. So I never, ever look to take sales unless we have a proper structure flip. And I know this might sound simple to a lot of people, or people might be going, that actually makes a lot of sense. It's just a rule that I apply to avoid getting caught in these sort of deeper retracements or things that may look like a downtrend, but in actual fact, this just becomes a whole range now. This whole area between the high and the last significant higher low, which is, let's just mark it in. Anything that happens inside here is completely irrelevant now. Anything that happens, it means nothing. This is the high. This is the last significant higher low, and that is it. So you know that you're in an uptrend until any of those break. If we start to break up above the high, we're still in that uptrend. And what we must do at that point, same as before, the first step, identify the highest point of the trend. Right here. Okay? Very easy. Simple. Identify the high. Next step, where did the push come from? Where did that leg begin? Right here. Okay, so right at this point, this is where we started. So your last significant higher low that was once at this level here has now moved over. All right, it's now shifted over to this point. And this is your new last significant higher low, and this is your new higher high. And that's how you work the trend. Okay, that's how you do it. And you'll always see these little corrections in here, a lot of people are going to see it and focus on, okay, this is the transition, this is the trend flipping. It's not. Okay, the majority of the time, 70%, 80% of the time, it's not the case. What's going to happen is we're going to continue to push up. Okay, so that's basically your uptrend. I guess we don't need to do the downtrend, but we'll go through some transitions now just to walk through it. But again, as we've done, we've identified a high. There's your last significant high or low. Market pulls back, pulls back again, creates a lower high, lower low. Again, we know that this is completely irrelevant. All right, pulls back again. And then on this occasion, we start to break. So now this is the point where it's important because we've broken below our last significant high or low. All right, so that structure has now flipped. Now this applies on, I want to say any time frame because market structure at the end of the day is market structure is driven by price action. But I only really use the market structure on daily, 4 hour, and then the 30-minute. You can use the hourly. The reason that I don't, which will likely be a question that's asked, is because I feel like if I'm waiting on the hourly candles to close, I might miss a move by that point. So I use the 4 hour candles and structure in correlation with the daily and of course the 30-minute, but tend to execute more on the 30-minute as I'll miss less moves if I'm using 30-minute candles as opposed to 1 hour candles. But you can apply it on any time frame and test it on any time frame, but it will apply the same way. And this is just structure at the end of the day. This is just market structure. It's not directional bias. This doesn't define the way in which I want to trade overall, because whilst you have one time frame bullish, one time frame bearish, which one do you use? And we can talk about that at the end as well. But as I say, this is now significant. There's a level of importance here because we've flipped that structure, and what's happened is we've now created a new low. Okay, so we've broken structure, and what we must do at that point is the exact same thing. Identify the lowest point of the trend. So while we're in the uptrend, we're identifying the highest point of the uptrend. Now that we've flipped structure, we start identifying the lowest point of the downtrend, which is of course here. And then again, same way, where did that leg originate from? Where did it come from? Well, we can quite clearly see that we've had this little pullback in here and then the drive down. So we know that the leg came from this point. So we now know that structure will remain bearish as long as we respect this level. And that doesn't mean that we can't pull back up to it. That doesn't mean we can't do something like this, and retest it again and then drive down. Irrelevant. It's irrelevant. It is still below this level, and whilst it continues to respect that level, we are bearish. All right, so anything that happens, again, in between your lowest point and your last significant lower high means nothing. Okay, it's still bearish. We should still be looking for selling confluences, okay? So again, that's what a transition would look like. And again, same way, if the transition changes, something like this, now you start to say, what's the highest point of the trend? Now I know some of the questions that we get sometimes are going to say, it's over here. It's not. This is a new trend, right? We're into a completely new trend now. So what you can say is, this is trend number 1. This is like information or trend number 2. This is trend number 3. So you're into a completely new trend now. So anything that's happened before is now irrelevant. These levels are now just used as support and resistance almost. So now because we've broken above that last significant lower high, flipped into the uptrend. So again, same theory applies. Highest point of the new uptrend. Where did the push come from? Quite simply here. Easy as that. All right, and that's how I'll trade the structure. And it's very simple. It's very rule-based. There's no guesswork involved. It's just an easy way of trying to apply price action trading and what the trend is. So, and as I say, I've used that for the last 3 years, 3.5 years, maybe a year to a year and a half of not knowing that that this is how I was doing it, or not necessarily explaining that this is how I was doing it. But that's just the way it was, and this is how I teach now, and this is how I always try to show people that work out what the trend is first. Work out what this structure is suggesting on daily, on 4 hour, on 30-minute, and then determine what your bias is going to be. Because if you've got 2 of your time frames or 3 of your time frames all working out that they're in a bullish trend, then you know exactly what to do. You know that you're just looking for areas of support to form. You're looking at clean zones to the left-hand side. You're looking at these zones where price action was clean before, that you'd expect it to be quite clean again. And that's examples that I can now go and show on a live chart.
Look, it's probably one of the best explanations of working out market structure I've seen in all the videos that I've seen. So really thorough, detailed, mechanical. I absolutely love it. So guys, I hope you enjoyed that, and I hope you really sort of took something away from it and jumping into your charts now and basically working it out for yourself, especially if you don't know how to read market structure. So look, Matthew, once again, thank you very much for coming back on the show. This has been fascinating, an awesome run through, a great little mini course here for you guys. Do you want to let the guys know how they can find out more about you?
Yeah, I mean, we're on YouTube. That's probably the best place. We do the London live streams every morning from 7:30 till 10 a.m. That's UK time. So it's just youtube.com/Todd Capital Group. We're also on Instagram, but again, you'll find all the information about us on the YouTube channel. That's probably the best place to go. And we're pretty much there daily for 2.5 to 3 hours, Monday to Thursday. So people can come and ask questions about things that they've maybe seen in these videos. You can ask them live and get like real-time answers and stuff like that. So that's probably the best bet to get in touch with us.
Awesome. Well, look, guys, we did actually shoot a podcast and another video with Matthew ages ago. So if you do want to check that out, I'll leave a link below this video as well, and there'll be links to all that stuff on there. And also do remember to hit subscribe, hit like, and do click the bell and click all if you want to get videos like this sent to your phone in the future. And we'll see you in the next one.